The following is for information purposes only and should not be considered investment advice. All opinions and views expressed by the contributors to this podcast are in a personal capacity only. They do not represent the views of Progressive Equity Research or any other organisation mentioned in this podcast.
Okay, Friday the 18th of October. Welcome back, Jeremy. Good to have you here.
Hi, Gareth. Yeah, good to be here.
So this week there's been, lots of individual bits of news, but I suppose from my perspective, probably the most consequential thing has been the death of the leader of Hamas at the hands of Israel, and whether or not that might allow Israel to slow things down and move potentially in the direction of peace or some kind of ceasefire or whatever that might lead to. So I'd be interested to hear how markets have reacted to that, and then more broadly, anything else that you've been seeing in the marketplace.
Certainly, Israel's had another good week, and a year or more on now from the October 7th attack, it's pretty clear that they're now on top of things in the region, and anyone who was their foe or is thinking of taking an oppositional stance against that country, I think would probably be having second thoughts. Yeah, the consequences of that are hard to fathom, but it does seem as though one way or another, Israel is pretty determined to impose some sort of order on their borders, and they do seem to have done that. And the price of oil, which I think is a measure of that, has declined sharply over the course of this week. I mean, if it's only last week when there was discussions and fears that Israel, with the help of the United States, would take out Iran's oil supply. That clearly didn't happen. The price of oil collapsed as a result. So, yeah, in terms of the knock-on benefit to global energy prices in the short term, that's a positive. Having said that, I think on the broader subject of energy, I think it's fascinating what's going on in the US among the big tech companies, two of which this week, Google and Amazon, have announced plans to co-locate their data centers, their AI-powered data centers, are going to co-locate with SMRs, small modular nuclear reactors. So I think it's really interesting that these big companies who need large-scale, uninterrupted power supplies for these data centers are going nuclear. And they're going nuclear on long-term contracts that are delivering uninterrupted energy at significantly higher rates than we're currently paying for our hydrocarbons and renewable-based mix of energy that most of us are consuming day to day.
We all assume that our own energy supply or electricity supply to our homes is pretty much uninterrupted, but they're clearly paying a significant premium to ensure that their supply really is uninterrupted. So clearly they think that our supply is a bit more at risk than we do.
I would say that sitting here in Europe, I think our current energy policies mean that our energy supply security is very interruptible. That is the risk. And I think the consequences of you or I having a blackout or a brownout or a interrupted power supply is de minimis compared with the cost of interrupting the power supply for Alphabet, Amazon or Microsoft. And that's the conclusion that these people have reached.
Yeah, no, that is interesting. Quite a difference in terms of the way they're viewing things.
Yeah, but this week we've also had quite a lot of news out on the UK. We've obviously started the week with the political theatre, really, let's face it, of the investment summit. But we've also had some data out. We've had UK employment and wage settlement data, which were pretty encouraging, both unemployment lower and average earnings growth slowing, but remaining ahead of inflation. The pound fell back below 130 for the first time since August. It's then sort of hovered around that level. The dollar has been reasserting its dominance this week, with the dollar index moving back above the 103 level. I think the big figure for the UK this week was the inflation data that came out and showed that we're now well below the 2% target with a 1.7% annualized rate. And the producer price data that came out along with it were all negative. So inflation is under control. And one of the things driving that is this short-term lower energy costs, which I would say, a short term, but for the time being, it's enabled our policymakers at least to say we're on top of inflation and now we can look at reducing rates.
Yeah. And if being on top of inflation does translate to lower settlements in terms of wage increases, then it could become a little bit more structural and embedded. You know, if you can say that this last few years of inflation has passed, then maybe we can get back to a lower inflation, lower interest rate future.
There's only one cloud on that horizon, and then we've got to get through. I don't think the statistics are currently showing us the consequences for this data on the public sector settlements that we've seen. It's quite high profile stuff with the doctors and the train drivers, for example. But in terms of consumer confidence, retail spending, I think the outlook short term is actually quite positive because we're going to get quite an extended period, a number of months here, where average earnings are going to be running significantly higher than retail inflation. And on cue today, we've had UK retail sales data for September, third consecutive month in a row, which was positive, beating expectations of a small decline, coming in at plus 0.3%. So, yeah, and on the back of the investment summit, we've had the government green paper on growth, their 10-year plan for their modern industrial strategy. They've said in it, in the summary, that they have a primary objective of long-term sustainable growth in our highest potential growth-driving sectors, growth that is supportive of net zero, regional growth and economic security and resilience. So there's not much not to like about that. And they've helpfully identified I think it's 9 growth sectors that they are looking as a government to support, which are advanced manufacturing, clean energy, creative industries, defense, digital technologies, financial services, life science, and professional and business services. And I guess unless you're digging things out of the ground or processing chemicals, you probably fall into one or more of those categories. So,
yep, it covers pretty much everything. So everything's growth.
Yeah.
Okay. Well, I look forward to the growth coming from all of those sectors. That is good to know.
Sort of elsewhere in the world, something I thought was notable in a rambling interview that former President Trump had with Bloomberg this week. He made a comment about the role of the Federal Reserve. He was asked whether he would sack Jay Powell if he won the election in a few weeks' time. And he said he thought being chairman of the Fed is the easiest job in the world, one that he could do in his lunch hour, basically. And it involves turning up to the office once a month and deciding interest rate policy on a coin toss. So, as ever, the media response to this was to take him at his word and thinking this was a serious policy. But with their 400 PhD economists in the Federal Reserve, if he does win, there's plenty for Elon Musk to get his teeth stuck into in terms of the Federal Reserve's cost base, that's for sure.
Yeah, whether or not they take control of the interest rate setting decision, they might be able to bring the cost down and start to trim that federal deficit. So, yeah.
Well, yeah, and I think sovereign debt is a whole big global subject that I think is the sort of elephant in the room that people aren't really focusing on. There's a lot of debate whether the US economy is hot or cold, whether it's going up or going down, whether we've got an imminent US recession or there's a no landing economy. And similarly, in China, the second biggest economy, it's equally uncertain.
It is.
And as all this is happening, gold serenely moves ever upward and is now today gone through $2,700 an ounce for the first time ever. So that is an indicator of fear. It is the ultimate safe asset. And that price move, I would argue, continues to tell you something.
Yeah. It probably says a lot about worries about the US, fears about China or investment by Chinese investors who don't want to put money into more houses, and also risk in the Middle East. It's probably a little bit of all of those things in gold.
And investors don't necessarily just want to keep on buying US treasuries.
Correct.
So what about the UK market? What have you seen this week?
So from the progressive stable, we've really had 3 things. We've had Through Vision, Sanderson Design Group and Virtue Motors. So Monday we had Through Vision, which is a specialist imaging camera business. They do solutions for detecting basically items hidden under people's clothing for security or monitoring of people flowing through high traffic areas. They had a trading update saying that they've had good growth in retail logistics, which is distribution centres, effectively distribution centres stopping their employees stealing stock or goods in transit through the warehouses. So that's been going well, but they've still had a lot of challenge in terms of orders from big governmental customers for customs checkpoints and things like that, they've had some big business in the past, but that hasn't really been coming through recently. So challenging trading at the moment. And we also saw the stepping down of their CEO, Colin Evans. So that was the update from Through Vision on Monday. Then we had Sanderson Design Group, who are a high-end furnishings business. They had H1 results this week, and they're also seeing challenging market conditions. But they've managed to increase their gross margin, so doing well. They seem to be doing everything right. They had seen a drop in licensing revenue, but despite that, margins improved pretty nicely. But they are seeing difficult markets. A lot of their products are sold when people buy or move houses or looking to renovate or redecorate, and that market's just been pretty tough. So they're doing the right things, but still seeing difficulties there. And then Virtue Motors, car dealership group, they also own Bristol Street Motors and a number of other brands. They've been trading well. Their after-sales service business has been growing nicely, and they've certainly been gaining market share in a couple of markets, especially the battery EV market and also Motability. So they've seen strength there despite difficulties in the new car market generally. But they've also been benefiting from more robust second-hand car values. So again, they've been trading nicely and effectively finding pockets of performance in what is a challenged space. And that new car market is still really quite pressured. I think we've got a bit of a stalemate between the government, who's trying to force the car makers to get us all to buy EVs, and consumers who just don't want to buy EVs. So there's a standoff there at the moment. But despite that, Virtue Motors have been doing nicely and battling their way through these choppy conditions and delivering a really pretty good result.
That's interesting. I saw Robert Forrester, the Virtue CEO, in a meeting yesterday talking about his results. He really is the last man standing in the motor distribution sector. I think he runs a very good business. He was saying that he felt the uncertain outlook, and it ever was an uncertain outlook in this industry. He's the largest listed and one of the largest distributors in the country now. They've got a strong balance sheet. They're in a strong position to sort of pick and choose who they do business with. And he's sort of increasing the amount of business he's doing with the upcoming Chinese manufacturers of EVs. He made the point that the UK is alone among the major world economies that aren't slapping big tariffs on Chinese EVs. So there should be some benefit, at least in that area. But all this uncertainty means that his ability to consolidate this market just increases.
Yeah, there's definitely lots of potential for consolidation. And as you say, he can choose the partners, the OEM vehicle manufacturers that they work with. And it feels like there's a lot of potential for them to do some good deals there.
Yeah, absolutely.
Have you seen anything else market-wise in the UK that we should be looking at?
Obviously, there's the continuing concern around what's coming in this budget, which is creating uncertainty. But the market is continuing to hold up okay under those circumstances, and deals are still being done. I noted that De La Rue has disposed of its authentication business for about 300 million quid this week. And I think that basically gives this business a stay of execution, at least. And there's talk that PE firm Advent is looking at acquiring Tate & Lyle, which is circa £3 billion deal, should it come to the surface. So that and talk of IPOs around the place. Blackstone are talking about listing a lot of their private investments. There are things for the market to focus on, and there's still life in the capital markets. And I would say that that's a positive.
So, yeah, modest levels of activity, and certainly anecdotally, I'm hearing that there is a lot of activity behind the scenes in people shuffling investments or buying or selling small businesses in advance of the budget. So I think there's quite a bit of stuff going on that perhaps isn't so visible. But yeah, you're right. It's good to see the markets still active. And if we can get through the budget and then I guess the US elections unscathed, then it could be a nice end to the year. So we'll have to wait and see how that all pans out. And what about the near term? What about next week?
Well, I had a good look. I can't really see anything. So in terms of the known unknowns, as they say, there's nothing. So watch out for the unknown unknowns, I guess.
Yes.
Because I think the last time we said this, we had a thing called the yen carry trade blow up, and the Japanese market was down 20% in a matter of hours. So, yeah.
Yeah. Well, let's hope that doesn't happen again. But no, you're right. I'm sure between this week and next, something will pop up and we can talk about it this time next Friday.
Okay.
Good stuff.
Look
Thanks,
forward
Jeremy.
to it.
Talk to you then.
Thanks.
Bye.
Brought to you by Progressive Equity.